Good morning, good morning, good morning. It is Thursday of CPI week. Good morning, good morning, good morning. It's Thursday of CPI. Alright, cool. I can hear myself. Alright, here's 9:30 opening. So we have the 9:30 opening. I'm looking to see how we trade into this 15-minute. So we took A30 highs. Took A30 highs. 9:30 did not really want to manipulate down to our 15-minute gap. Prior to 9:30 open, we did have S&Ts at these lows. So before 9:30 took those 8:30 highs, we had S&Ts at these lows here. So ES didn't take this low. ES did take this low, but NQ didn't. So you had those S&Ts at those lows. I was looking to see if 9:30 can at least manipulate inside this 15-minute gap and then continue pushing higher. But we might leave this gap as a breakaway. So we are above midnight open. And still have Asia highs intact. So we haven't taken them yet. All right, so we took Asia highs. We left this 15-minute gap as a breakaway, and then we continue pushing higher, taking out Asia highs. Yeah, there's no this really there wasn't any entry, but that's okay too. We still have previous week high, it's slightly above us. So I'm gonna delete this. All right, so we're above the midnight open. Have swept Asia highs. I don't want to see us come back below the 9:30 open. We do still have previous week high above us. So if we do take previous week high, I wouldn't really expect us to take previous monthly high as well. But at the moment, the only clear goal I see for me is previous week high because we're already about like 60 points away. But if we do close back below 9:30, then I'm likely not going to be bullish anymore. Yeah, before we took Asia highs, I was looking for a push down to this 15-minute gap right here. Because what 8:30 did was PPI news released, came down, swept the sell side, and we were also trading within this 4-hour imbalance up here in the left in the top left. So we had this 4-hour gap, and 8:30 news release pushed us lower, swept sell side, came back above, showed displacement, which is what we want to see. We also had this 15-minute change to delivery. So this body closure with displacement above this last down close candle right here. And we had this breaker. So breaker aligning with the fair value gap, your unicorn. So I was waiting for price to trade lower. So 9:30 Judas into this 15-minute gap. And then look for a long entry to at least Asia highs. And potentially previous week high with the runner. But we didn't really fill in this gap. Instead, we just immediately just pushed up and took out the Asia highs, and now we're coming back down with an aggressive retracement. So we had some reactions from the midnight opening price. So now we have tapped into this 15-minute gap again. All right, so what I'm paying attention to at the moment is, just give me 1 second. All right, I'm back. All right, so on the hourly time frame, we had the 8 a.m. showing clear displacement, and then we had this 9 a.m. retesting this last down close candle. So technically, this would be your change state delivery, which is what we technically just tapped, or just slightly tapped, but I don't really want to see an hourly closure below the 6 a.m. So this is the 15-minute right here, this purple box. So 5 minute, 4 minute, 3 minute, 2 minute. Okay. So I'm gonna draw out the premium discount from this swing high to this swing low. I want to see if we can get a body closure above this inversion up here. So we have tap premium of this range, the swing high and the swing low of the equilibrium at premium. Do you think PPI low is the drawn liquidity? So this 832 low. If we do get a closure with body of candles below the 6 a.m., then most definitely we can look for those CPI lows or those PPI lows down here. But my draw right now is previous week high. So my validation level will probably just be a close below 6 a.m. So if we do get that closure below 6 a.m., we can definitely see those 832 lows being ran. Okay, so as of now, we had this retracement up into premium at this 1 minute fair value gap. We're seeing clear rejection away from this gap. We're going to see how we close with this 1 minute gap here around the 930. Okay, so we close below this gap. So this likely will just be your inversion right here. So looking at this right now, $832 lows could be a good target. I think I'm gonna be more open to wait for 10 a.m. So waiting for 10 o'clock to open and then seeing where we go from there. If I'm bullish, then I want to see at least a closure above the midnight open. If I'm bearish, then I'm going to see a closure below this 15-minute gap. So that's currently what I'm seeing on the 15-minute time frame. So if I'm bullish, close above the midnight open. If I'm bearish, close below this 15-minute gap. So it's just a matter of waiting for 10 o'clock right now. So if we get that 15-minute closure below this 15-minute gap, then 830 PPI lows would be a good target, as well as these this low as well. But if we do get a closure above a displacement of the midnight, then previous week high would be a good target for longs. But yeah, like I said, for the 830 news release, we swept this low, and then we had that change to delivery. So this last down close candle. So we are above the 945 15-minute opening. So we retraced to premium, had this aggressive retracement back down to discount, and now we're seeing that continuation back up. So we're getting that closure above the consequent erosion of this 1 minute. These lows would have been good if we had that 15-minute or a 1 minute closure below this 15-minute gap or the 6 a.m. But we never got that. All we did was retracement to premium, retracement back down to discount, and then we had that expansion going higher. All right, so draw from here still remains the same. I like the idea of us just pushing. Oh, wow, yeah. Yeah. Okay, so we took the high as soon as I said it, but all right, so we took previous 10 a.m. high. We still have previous week high above us, like 14 points. But yeah, we have ever since this week or the past week, whenever 10 a.m. opens, the first 1 minute candles or the first 1 minute candles after the 5 minutes, there's usually a candle that spikes and delivers more than like 40 points, 50 points. So this candle, for example, delivered like 44 points in like 3 seconds. So it's gonna be something for me to adapt in, especially with the way the markets are right now. So there's gonna be a lot of candles that deliver like 100 points, 50 points in like seconds. And if your drawn liquidity is right and you're right on narrative and where price wants to go, you can take advantage of the volatility. But the same thing can happen if you're wrong. You can get stopped out in 1 second just by a 1 minute 100 point candle to the downside. So yeah, it's gonna take a lot to adapt to this, but it's doable. So 10 a.m. open, I was expecting for us to at least retrace a little for the 10 a.m. candle. At least to like this rally gap down here. So I was expecting for us to retrace down here, like coming down like that. And then I was expecting us to just have that reversal back up, taking out this high. But you can see that this 1032 candle or 1002 candle just spiked it all the way up and just took this high. So yeah, I was expecting some kind of retracement and then push higher, but this is fine too. At least that drawn liquidity got hit. We still have previous week high above us that we haven't taken out yet, but we're gonna see how we go from here. So this high got ran, so we can delete that. 15-minute time frame. I like how this candle open above the midnight open. So I like how, yeah, I like how this 15-minute open above. The only thing I don't want to see, however, is just us not taking previous week high and just reversing. I really want to see that. So we have this 5-minute gap just slightly below us. Mark that out. This 5-minute gap also aligns with the midnight opening price. I really do want to see us take previous week high for today. Also aligns with -4. All right, so we stung into the 5-minute gap. So from this 1-minute gap, I want to see if we can get at least a 1-minute inversion. We do get a body closure below the 5-minute, then we're likely just going to go for these 830 lows. All right, so 5 minute stung below the midnight opening. Only wicks right now. So I'm looking at the 1 minute now. So preferably this 1 minute right here. So this candle at 10:07 spiked all the way down right at equilibrium. So it came down 40 points right at equilibrium. We do have SMTs at these lows from the 954 candle. Yes, didn't take it, but I think he did. We do get a body closure above this 1 minute rally gap. Then we can probably look for previous week high. If we don't and we reject, then the idea will probably be just invalidated. This kind of retracement down at 10:07 is what I wanted to see before we took out this high. So as soon as 10 a.m. opened, I would have preferred this candle to come down instead, right at 10, SMT, and then look for this high, and then previous week high. I don't like how we just took it right away. So we got a closure above this 1 minute, so this would be your 1 minute inversion. Got this 5 minute gap. SMTs at the lows. Now we're retesting that inversion. go. Take previous week high once and for all. Let's go. Previous week high now. We're about to take it. Boom. There we go. Nice. We took previous week high. Now that we took previous week high, what is my next draw on liquidity? What is my next target? My next what is my next area to work with, right? So initially when I came into this session, the only draw on liquidity I had was previous week high because we already took previous daily high and the 4-hour external highs. So I'm gonna show you guys what that is right now. So on the higher time frame, so I'm talking about the daily. We already had taken the previous daily high. So let me get all this mess out the way. So yeah, coming into the session, we already had taken this previous daily high, and we had already taken this external high. So this external high here, this external low. So what does that mean? That means that this Monday's daily print, we were inside this range for about 2 days. So Tuesday's range was inside this range, Wednesday's range was inside Monday's range, and it wasn't until Thursday where we then had that expansion higher, taking out the external high, previous daily high, and previous week high. So now that we have taken all of my draws and liquidities, what is my next draw liquidity? Well, if the trend is clearly bullish, my next draw liquidity would be previous monthly high, which is this candle. So on the monthly candle, we have now taken neither previous monthly high or previous monthly low. So when you zoom out, you can clearly see that we have a clear target. We may not take this target this week, maybe next week, but we do have a clear draw liquidity. As we go down the lower time frames, we have already taken previous week high. And if we keep going down, 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 we already took all the buy side here. So as of now, I'm not really looking to engage in the market because what I wanted already panned out. So we had the PPI news release that swept the sell side liquidity. So this news release was your manipulation. After manipulation, we were shown displacement, creating a fair value gap. We then had the 930 open. At first, the 930 distributed higher, taking out Asia highs. But then we came lower, repricing into this 15-minute gap again. Right? And this wasn't just a fair value gap. We had a breaker that aligned with this fair value gap, which made this an A+ entry. And we were also coming away from the 4-hour gap. So this 4-hour gap here on the 4-hour time frame. So we were also coming away from this 4-hour gap, which made it even more high probability. So we had this 15-minute unicorn setup. But from this 15-minute gap, we then continued to deliver into the upside efficiently, taking out previous week high, and that's about it. When we had that 15-minute closure, so the 10 a.m. closure above the midnight open, that made it even more high probability for us to see a move pushing higher. So I was pretty confident in longs. And then we had this 5-minute gap away that we rebalanced, tapping the midnight open, but we don't really just want to see a 5-minute gap. We want to see more of a 1-minute confirmation. So the time frame alignment for a 5-minute fair value gap is more of a 1-minute confirmation. So it can be a 1-minute change to delivery, or it can be a 1-minute inversion. So on that 5-minute gap, we did see this this candle, this wiki candle, but we did have SMTs at those lows. And you can see that if we put the consequent encroachment of that 5 minute, you can see how the body closures respected that 5 minute fair value gap. You see how we never had that body closure below the consequent encroachment to the midpoint of this fair value gap. So we pretty much respected it. We had SMTs at the lows. And then what I was looking for from this 5 minute gap was that 1 minute inversion, which was this first fair value gap. And you can see how this candle at 10:11 opened above the consequent encroachment. And then we had that body closure above at 10:12, which we then retested that 1 minute inversion. So your trade could have been like this. Stop at entry at the 1 minute inversion. Stop could be this low, or it could be this low. And then your target could be buy side resting above, or if you want, you can just go for previous week high. That'll be a 2.6R trade, 45 points. So this is one of my favorite models because you're looking for a 15-minute or a 5 minute fair value gap, and then you're just looking for a 1 minute confirmation to your target. So this was a really nice inversion model entry. But yeah, so I also drew these deviations down at these lows because this price leg down was the one that filled in the 15-minute fair value gap down here. And then we had -4 aligning with previous week high, which we then tapped above here. And yeah, so I'm not really expecting anything else. If I were to, I wouldn't really look to trade myself because all of my draws and liquidities already got hit. So the external high is previous daily high and previous week high. We do have previous monthly high above, but I don't know if we're gonna be able to hit that, especially today. But who knows? Maybe we could hit it. But as of now, not really looking to trade. I'm really content with what I've seen of today. But I hope you guys were able to understand what I was trying to say. And yeah, this was a very good tape read today. So I'm likely going to end the live stream now because we already took all the targets that I wanted. But actually, I'll probably stay for a little while. Carlos, I'm honest. I did mistakes today. I took 2 trades. The first one, normal risk. The second, I reduced my risk. But I was sure that the high was the draw liquidity, so I took 1 mini instead of mini. So to make it all back, I lost a trade as well. Now I took the inversion and made it all back, but I feel like shit. No, that's a huge mistake. I mean, at least you're aware though, because sometimes there's winning trades where you make money. It's not really a winning trade if you broke your rules. So I like to view trades as either green or red based on if I follow my rules. So if I made money and I followed my rules, that's a green day. If I made money but broke my rules, that's a red day. Vice versa. And this will probably just help your psychology a lot more. But yeah, this wasn't a easy price leg movement to read for these highs because we did keep getting these spikes down, like this candle right here where we delivered like 38 points in 1 second. But it's all about premium discount. So price retraces to discount, moves away. Price retraces to discount, moves away. And then, yeah, vice versa. you can take this high and then this low as well. So price retraces the discount, moves away, discount moves away, discount moves away, and we just keep continue pushing higher and higher. So yeah, so this low, this high, we then push lower right here to discount and move higher, retracement down to discount, we then move higher, retracement down to discount, and then we move higher. When we retrace, I don't really know sometimes where to look. For a minute, I thought we will go for PPI lows because of the 5-minute change to delivery. 5-minute change to delivery, let me see. Swing low. I mean, I wouldn't really count this as a change to delivery, but I would look more for a closure below this 5-minute gap. But I was pretty confident in being bullish today, just from the higher time frame narrative. So just pull out your weekly chart, and then you can see that this high was literally a few points away from getting hit. So you can't really neglect the higher time frame narrative. Can't really fight against the trend. Because if you fight against the trend, you're just gonna get smacked. So just pull out your weekly chart, look at it, see what target is next, and just trade based off that, following the higher time frame trend. But it's pretty good session today. This 4-hour gap right here definitely had a lot of weight to it. I would be really surprised if we were able to hit Peru's multi-high today. Really surprised. We're about like 92 points away from Peru's multi-high. But who knows? Maybe we could hit it today. Maybe tomorrow, maybe next week. I don't really care, but that is going to be a good draw on liquidity for next week. Okay, so 15-minute time frame, we're creating this 15-minute gap right here. So if we do want to play continuation to the upside, I'm going to see if we can get some kind of unicorn setup out this 5-minute gap. Okay. This is Tesla right now. So Tesla on the monthly time frame, we have a premium discount. We tap discount from this monthly fair value gap. So I want to see if we can get a closure above the weekly open. Then I can look to swim some calls to these highs above. Okay, 1 month out calls these highs. All right, aside from Tesla, I'm gonna go back to MQ. Yeah, honestly, it wouldn't be bad to play continuation. I'm gonna wait for this 15-minute gap to be made, and I'm gonna see what we get at this 15-minute gap. Send alert for previous monthly high. Okay, these deviations were from these lows. I'm gonna draw out the deviations for the 6 a.m. But what about the 10 a.m.? All right, 10 a.m. We have the low of 10 a.m. 4-hour with the swing high. Oh, wow. You could actually run previous monthly high today. Okay. How many points are we away from? Yeah, we're definitely going to run previous monthly high today. We're 48 points away. No doubt about it. We're going to draw the magnets. We're creating this 5-minute gap. Isn't it isn't it so random that the highest probability expansion of today was a Thursday after CPI release? Isn't it just so random that we get the best expansion on a Thursday? Like if you look at your hourly chart, I'm gonna show you guys something. I'll show you guys something real quick. Okay. If we look at our weekly candle, where's our weekly? Okay, weekly is like right here. So if we look at our weekly candle, Monday, accumulation, Tuesday, accumulation. But if you look at your economic calendar, what do we have on Wednesday? Wednesday, we have CPI. What does CPI do? CPI is your manipulation. So what does CPI do? CPI manipulates price into your OTE of this swing high and this swing low. Now, if manipulation is established, what do you look for Thursday? Thursday, you look for continuation to the upside because you are in the distribution phase of the weekly candle. So, all you're doing is waiting for CPI to manipulate, because in trading, timing is everything. People don't teach you this. People don't teach you this at all. Your economic calendar is your roadmap to know when to engage in the market. Notice how Monday, Tuesday especially, we had this chop fest. The economic calendar tells you when to engage in price. When is CPI? What is CPI known for? Manipulation, right? When is the best high probability day to engage? After manipulation is established. And then you get your Thursday expansion, not taking out Monday's high, previous week high, and we're about to take previous monthly high. If not now, then later. So every week that you come into the market, you have to view the economic calendar because it tells you when you should engage in the market and when you shouldn't. And if you don't adhere by the rules of this roadmap, then the probabilities are going to be against you. And with trading, probabilities are everything. But yeah, that's basically how I'm viewing this weekly candle development. So basically, it's like this: accumulation, Monday, Tuesday, manipulation with CPI news release, and then you get that distribution back up with Thursday. So yeah, this week is pretty clean. Power 3, open, low, high, close. I didn't really expect us to keep continuing higher after previous week high, just because weekly time frame we're consolidating. But this is very clean. And what I mean by weekly time frame consolidating is the weekly accumulation. So I'm gonna pull that up real quick. So weekly time frame, you can see how we're just going back and forth, back and forth. But if we do just blast off previous monthly high and close above, then we can probably see more continuation to the upside, probably to all-time highs, and continue pushing higher. Because after this accumulation, we're gonna get expansion. So I wouldn't be surprised if we keep pushing higher, 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 higher on NASDAQ. Hopefully too, because I'm pretty tired of this accumulation. But you have to remember, for your yearly time frame, the first quarter, treat it as your Monday. So Mondays are usually known for the false moves and for the accumulation built up. So the first quarter of the year, just treat it as your Monday. So this is your typical Monday for the first quarter of the year. But yeah, 4 hour. Gonna wait for a price to tap this 5 minute gap. We do have this 15 right below, but I feel like we're just gonna leave it as a breakaway. I don't really see price coming down. 5 minutes. We're about to tap this 5 minute gap. If we do see a 1 minute closure below this 5 minute gap, then that 15 below, we'll probably just tap that one instead. All right, about to tap into this 5 minute gap now. All right, I'm using the bathroom. I'll be right back. It's gonna be like 2 to 3 minutes. All right, so we tapped into the 5 minutes, 3 minute, 2 minute, 1 minute. All right. We have this 1 minute for value gap here. All right, so we're getting that 1 minute version from that 5 minute gap. Check the 15-minute time frame. So the 15-minute time frame, we have this 15-minute gap below us. So this one has more weight than that 5 minute. I want to be paying attention to this 15 right here. So this 5 minute, I don't really like that 5 minute. Okay. So we're gonna see if we can get some reactions out this 15 minute. So preferably maybe something like us stinging into this 15, running it lower, continuing higher, and it just blasting off. So let's see if we get something like this. I don't like the rage though. Because if we draw a premium discount. Oh no. 5 minute, 4 minute, 3 minute, 2 minute. We're gonna see how we react though from this area. This previous monthly high is straight up above us. $10.50 to $11.10 macro. This is the 15-second time frame. So I'm gonna see how the candles develop because we do have this 15-minute fair value gap below us. All right, so what is the current 15-minute candle? It's the 11 a.m. So we're gonna have this marked out. 11 a.m. 5-minute time frame. We're just chopping these candles. We're retesting the 1-minute breaker. Whoa. This macro is really holding price. We do have S&Ts at the highs though, I'm pretty sure. Yeah. Yes, managed to take this high out, but NQ hasn't. So we have S&Ts. We're definitely gonna feel that imbalance below though. The macro is just holding price though. So this imbalance right here is the one I'm looking for price to take. But we were kind of consolidating for a while though. So this is the breaker that I drew out. It's finally doing some work now. So these two up close candles, you have your change to delivery. So you take the next candle, this down close, and you extend it out. Ultimately, my drawn liquidity is higher, so previous monthly high. But I'm looking for us to tap into this 15-minute down below first, and then see if we can get a 1-minute confirmation. I'm watching a 15-minute fair value gap from January 24. January 24. 15-minute fair value gap from January 24. Yeah, that's a very far away fair value gap. Yeah, price is taking its time. Unless we want to kind of like accumulate, then manipulate, and then distribute back up, that would make more sense. A little bit deeper. I'll be right back. Give me like a minute. All right, so what have we done? All right, pretty much we have still been accumulating. Yeah, we still have been accumulating. If we still make a new high on SP, do you still watch it by NQ? So if we have like SMTs at the highs, honestly, what I do is if the higher time frame trend is bullish, I keep buying. But I don't just buy randomly. I wait for higher time frame PD arrays, like 4 hour gaps, hourly gaps, 15-minute gaps, and I basically just look for old highs and lows from higher time frame candles. So monthly candles, weekly candles, dailies, I look for their highs and lows. All right, we're finally tapping to that 15-minute gap now. All right, let's see if we get that second sell side sweep. All right, so we stung into this 15 imbalance. So this one right here, we stung into this 15-minute imbalance. Preferably, I would have wanted like another stop run to the lows, but next thing I look for is a 1-minute change stay delivery. So a body closure above the last down close candle of this leg price that came and stung into this 15. I wanted a bigger manipulation though. Like after we stung into this 15, I would have wanted like another sweep of the lows and then push higher, because the bigger the manipulation, the bigger the expansion. So your accumulation, manipulation, and then distribution. Let's see if we get that second sell side sweep, because I kind of want a bigger manipulation. I don't really like just how we swept this low and that's it. There we go. So we had that second sell side sweep. This is what I want to see, a bigger manipulation. What's the current power of 3? It's the 11 a.m. So I'm gonna mark that out. So 11 o'clock, the current hourly power of 3 is the 11 o'clock, so top right. Okay. So we had that second sell side sweep. I'm gonna change this indicator. I'm gonna do the hourly candle. Yeah. As for the hourly candle, we have this high up here that we haven't taken yet. By the same time, we can look for a bigger manipulation. Maybe to this hourly 25% dealing range. Do you stream every day? Yeah, I started streaming every day now, so I'm trying to be consistent with streams. But I started them like this month or last month. All right, so he's had that sell side sweep. I want to pay attention to this 1 minute for rally gap. All right, so we tapped that 25% dealing range now. This looks like a good manipulation here now. Because when we're accumulating like this, I don't like manipulation being that small, like only sweeping these lows. I don't really like that. I like to see like a bigger manipulation. So that way we can get a bigger distribution back to the upside. But if I go to our 15 right now, we also have these 15-minute gaps below. So this is the range from this high. So this high right here. And then we have that swing low down here, which is that range lower down there. So basically just from this high to this low, we have 1 for rally gap, 2 for rally gap, 3 for rally gap. So the moment if we don't respect this 15, we could drive lower, push into this or this one. So I'm pretty open on any scenario that could occur right now. Let's see if I can refresh my trading view. To refresh a trading view screen using a hotkey, Control R, Windows, which will reload. All right, Control R. Reload, save and reload. All right, I'm gonna reload my trading view because it had that little gap on the 1 minute time frame, and I don't really like that. There we go. So right now what I'm paying attention to is the hourly candle, so the 11 a.m. hourly candle. So for this hourly candle, we haven't taken the low or the high yet of this hourly candle. So this one right here, this is the hourly time frame. So we haven't taken the high or the low yet. So what I'm looking for this candle is either for it to be a open, low, high, close, taking out this previous hourly high, or we stay within this range and then we have 12 o'clock open and go into this this hourly gap instead. So this is what I'm paying attention to right now. It's just at this hourly candle. Because the 4 hour, there's not really anything to work on the 4 hour. 4 hour we already took this high out. But the hourly time frame we haven't. So we could treat the hourly candles just like our daily candles. So that's why I have this marked out on my chart on the 1 minute, these two candles. So the 11 o'clock and the 10 o'clock. So it looks like we're driving past lower on the 15. The next 15-minute gap is right below down here. So I'm gonna draw out this just in case. The best thing about using time frame alignment is you don't have to get in right away as soon as we tap into a 15. So looking for confirmation is always key, especially off lower time frame. So higher time frame gaps, lower time frame confirmation. But yeah, I'm looking at this power 3 hourly candle development. Alright, I'm in the live stream, but I'm gonna stream tomorrow. Tomorrow we have, let's check what we have tomorrow. Tomorrow we have news at 8:30. So yeah, I'm gonna stream tomorrow and we're gonna wrap it up for today. I'm gonna come and look at PM, see what PM has to offer, but as from now, I'm pretty much done for the day. So I'll catch you guys tomorrow in the morning live stream. Stay safe, don't do dumb stuff, and have a good day, guys.